Well, I'll tell you what, you can't say it's the Three Stooges. I think that Nvidia is a tremendous company from a semiconductor standpoint. There's nothing you could say about that company other than they're approaching perfection. It's a great company, but the two others literally made for each other, two peas in a pod. OpenAI is an abomination. Their logo looks like it's eating itself, or like a dog eating its tail. It's pretty appropriate. OpenAI is true to its name. Was meant to be open source, but it's no longer open. It's for profit, and it's there to learn you, so it doesn't need you anymore. In terms of Amazon, classic company that's famous as a fast follower. OpenAI better be careful because there's going to be Amazon AI, and they'll get rid of OpenAI at some point. But the idea that these two companies, make the Chinese blush about the way that they operate. They take people's data, they take information, and they build companies. There's a concept in AI, success will kill you. If you're a Ford Motor Company and you use AI, systems, to manage your meetings and manage your payroll or any other aspect, you might be surprised to learn that you gave up the blueprints of how to build an American machine, how to have a system that's proprietary to your own, and have even your brand name protected. So I think these systems are terrible. I think the investment is late to the game. And, the Mag 7 doesn't include IBM for some reason, but to me, that's your leader. That's a company that said, there's going to be proprietary stovepipe pipes, and we're going to make AI in agentic forms where we're going to connect agent to agent. But these are no different than apps and other mechanisms that companies use. OpenAI takes this approach of, well, no, we're not open anymore. No, we're not for profit anymore. But we're going to take everything you know and do and pretend to be a service like a Facebook in disguise, and get all your information. And when we have it, we don't need you anymore. So that's what I feel about it.
In order to pave the way for future expansion and a possible IPO, OpenAI recently reorganized its collaboration with Microsoft. The company will probably need a lot more GPUs in order to pursue artificial general intelligence. If larger AI investments continue to be robust, Nvidia can increase its $5 trillion valuation. When it comes to accelerator chips designed specifically for training and running AI models in data centers, Nvidia is the undisputed leader. However, only a handful of corporations are investing tens of billions of dollars, so the company is dependent on a relatively small pool of well-funded hyperscalers to purchase those AI processors. Among them is OpenAI, the company that created ChatGPT and Sora. One of the fastest-growing businesses in history is OpenAI. It recently revealed some amazing news that is encouraging for Nvidia's future operations. I'll go over the most recent events and discuss their potential implications for Nvidia's stock. This is something you should not miss. Thanks to his proactive leadership at OpenAI, CEO Sam Altman has contributed to the artificial intelligence AI explosion. As OpenAI and other businesses scramble to build the massive computing capacity required not only to develop more sophisticated AI models, but also to handle the workloads associated with millions of simultaneous users, the company's flagship product, ChatGPT, went viral in early 2023, sparking a surge in data center investments. Microsoft and the business have been partners since 2019, but as OpenAI continues to command more chips and funding to support its explosive expansion, the two parties have clashed over the years. The two businesses recently revealed a reorganized collaboration that opens the door for a possible initial public offering, IPO, and provides OpenAI more flexibility to acquire the resources it requires. One of the most important market events in history would probably be OpenAI's IPO. According to some experts, an IPO would raise more than $60 billion at a $1 trillion valuation, whereas the company's recent agreement with Microsoft values it at about $500 billion. These occurrences would release a wealth of funds that OpenAI may utilize to further support its expansion goals. OpenAI's chip requirements have been openly publicized by CEO Sam Altman, who stated in a July post on social networking site X that the company needs to find a way to increase the number of GPUs from 1 million to 100 million. It's obvious that Sam Altman and OpenAI intend to keep purchasing GPUs for their AI initiatives, even if that number isn't exact. The company's objectives are very clear: to develop artificial general intelligence, AGI, that is comparable to human reasoning and logic. The holy grail of AI research is this. Nvidia's market share is estimated by industry experts to be as high as 92%. Personally, I don't think Nvidia will continue to hold such a large share of the market for AI chips. Other chip manufacturers, as well as Nvidia's own clients, who are creating their own proprietary chips, are competitors. Nevertheless, there appears to be no slowing down of this figurative arms race in the AI arena. Even if Nvidia's market share somewhat declines, there will probably be enough demand for chips for the company to continue expanding. As the first business to reach a $5 trillion market valuation, Nvidia recently garnered headlines. It's an astounding accomplishment, surpassing the whole GDP of certain nations. However, Nvidia keeps generating ever more impressive revenue and profits to support this claim. Nvidia is currently trading at a fair forward PE ratio, only 45 times full-year earnings estimates, despite having a big market cap. Over the next 3 to 5 years, Wall Street analysts presently predict that Nvidia's earnings will increase by an average of over 33% per year. Owning the stock at these levels is justified by the substantial growth. It's true that there's a chance the AI growth will slow down. The stock of Nvidia's client Meta Platforms recently fell as a result of investor backlash to the company's ambitious AI spending goals. Nevertheless, it's now evident that many people view AI as the next frontier and the potential power that comes with dominating that field. Nvidia would probably benefit from OpenAI's ambitious objectives and new organizational structure as those AI chip orders keep coming in. Because of its leadership in the revolutionary field of artificial intelligence, AI, Nvidia has become one of the most well-liked stocks on the planet in recent years. However, the tech behemoth isn't merely playing a minor role in AI. Rather, it has established itself as the industry's driving force. This is due to the fact that Nvidia creates the best-performing chips, and since AI clients want to succeed in the industry, they have been swarming to Nvidia for their projects. The stock has surged higher as a result of all of this, and revenue has skyrocketed to record heights. For instance, the share price of Nvidia has increased 400% in the last 3 years. Despite Nvidia's enormous gains, investors continue to seek to purchase the company since the AI bubble is far from over. And now might be the time because a possible catalyst is just around the corner. Is it wise to purchase Nvidia before November 19th? Let's investigate. But before we get started, let's take a look at how Nvidia went from primarily supporting the video gaming business to becoming the dominant force in AI. In its early years, this over 30-year-old firm mainly offered graphics processing units, GPUs, to gaming customers. However, Nvidia took action to change that as it became clear that the GPU could be used in other contexts. To increase the market for its GPUs, the business created the CUDA parallel computing platform. As artificial intelligence, AI, became a potentially revolutionary field, Nvidia actually customized their GPUs to meet AI requirements. The company's revenue has increased over the last few years, demonstrating how all of this has changed the business. Nvidia has taken the lead in the AI business since entering it early, and its dedication to innovation might keep it there. To let investors know what to anticipate, Nvidia has laid out a roadmap through 2028 and states that it will refresh its GPUs annually. The business recently announced that orders for the future Rubin system and its current Blackwell platform will boost its sales from now through 2026 to $500 billion. All of this lends credence to the notion that Nvidia and its investors will see further success in the future. Let's now discuss if you should buy this top AI stock now before its next significant event, which is November 19th. So what's going to happen? For the fiscal year 2026, Nvidia is expected to release its third quarter financial results. Nvidia has a strong track record of earnings performance. In previous quarters, the company has reported double-digit improvements. Additionally, during the last 4 quarters, the company has exceeded analysts' projections. We have cause to be hopeful about Nvidia's next report given the robust demand for chips revealed by Nvidia's chip manufacturer, Taiwan Semiconductor Manufacturing, and the AI client demand stated by Nvidia customers like Alphabet. Does this imply that the time has come to buy shares in order to perhaps profit on a post-earnings gain? Not always. Whether you purchase Nvidia now or in a few weeks, you will most likely see the same performance over the next 5 or 10 years. Nevertheless, I think it's a great investment to buy and keep onto for the long run. You don't have to worry about timing the market to purchase the stock at a specific time because short-term price swings won't significantly affect long-term performance. An exception would be if the stock had dropped to an extremely low price, as occurred earlier this year, when tech market falls caused valuations to drop, and Nvidia's price dropped from more than 40 times forward earnings estimates to just over 20 times. Investors might rush to purchase a stock at a discount in the scenario. However, Nvidia's stock has now recovered to roughly 44 times projected earnings forecasts, which is still a pricey level, but still makes sense in light of Nvidia's current and future growth stories. Furthermore, I don't think its value will change much until Nvidia or the market as a whole shocks investors with something big. For instance, this spring, investors were concerned about how import tariffs would affect businesses and the economy, which caused Nvidia's value to decline. Taking everything into account, Nvidia is still a good investment, but you don't need to buy it right away before November 19th. Recently, Samsung and Nvidia revealed plans to construct an advanced AI factory that will combine digital twins, accelerated computing, and AI-driven chip manufacture in locations worldwide. The plant will incorporate over 50,000 Nvidia GPUs into Samsung's semiconductor manufacturing. With a 20x increase in computational lithography performance and real-time digital twin capabilities for predictive maintenance and operational efficiency, this collaboration sets a new standard for intelligent and autonomous production on a worldwide scale. We'll now examine how this partnership with Samsung could support Nvidia's investment case by highlighting the company's expanding presence in industrial automation and AI-powered manufacturing. Investors who wish to purchase Nvidia stock must have faith in the company's capacity to propel long-term growth by controlling the global AI compute stack and snatching up a sizable portion of the booming market for next-generation silicon, full-stack solutions, and generative AI infrastructure. Though it does not significantly change the most significant short-term catalyst, the ongoing U.S.-China export control decisions, the announcement of Nvidia's extended partnership with Samsung to build an advanced AI factory powered by more than 50,000 GPUs further emphasizes the strength of Nvidia's ecosystem. These decisions continue to be the biggest swing factor for near-term sales and future addressable market. The partnership between Nvidia and South Korea on the expansion of sovereign AI infrastructure is among the most pertinent recent announcements. Although the scope of China-related risks is still an open question, this endeavor, which involves more than 250,000 GPUs spread across several Korean industrial giants, closely resembles the Samsung partnership and demonstrates Nvidia's leadership in global AI factory deployments, a major growth driver. Investors should be aware, however, that there is still a great deal of ambiguity surrounding export regulations and whether or not crucial GPU product lines are accessible in China. By 2028, Nvidia expects $337.2 billion in sales and $187.9 billion in profits. Based on a projected annual revenue growth rate of 26.8%, this translates into an approximate $101.3 billion increase in earnings over the current $86.6 billion. Discover how Nvidia's projections result in a fair value of $225.50, which is 9% more than its present price. The Simply Wall Saint community's 430 member assessments indicate that Nvidia's fair value ranges from $90.15 to $341.12 per share. Although many regard Nvidia's technological leadership as an advantage, be cautious that export limitations may limit future revenue. Consider multiple viewpoints before making a decision. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
$1 deal with OpenAI to help run cloud computing. It is the first deal between OpenAI and Amazon, and it's even more interesting because OpenAI, remember, is partly owned by Microsoft, which is a big Amazon competitor on the cloud side of the business. Bottom line, with all these deals, it's getting pretty cloudy on who is doing what. So let's open up the clouds a bit, try to shine a little light in. Mackenzie Sigalos in San Francisco to lay out exactly what's going on here. Mac.
Hey, Brian. So what we're seeing is pretty notable for OpenAI. They haven't had this flexibility to sign whomever they wanted in the cloud wars. They're now, for the first time, teaming up with Amazon. And you said it, Amazon is not only a big rival to Microsoft Azure cloud services, it also actually is a big investor in OpenAI rival Anthropic. They've invested $8 billion into them. But this really shows just how much Amazon needs notable customers like OpenAI in order to build up its AWS strategy. It really needs to bring all those AI customers in-house. So even though it's not invested in OpenAI, they want them using their cloud services.
All right, talk to us about this Amazon, OpenAI, but Microsoft thing, because what it feels like is one of those like Real Housewives of Silicon Valley where people are kind of dating everybody or not at the same time, but kind of at the same time, because Microsoft owns part of OpenAI. They're fierce competitors on parts of the cloud side with Amazon, and yet this deal is with Amazon, but it's partly owned by Microsoft. I'm so confused.
Yeah, I mean, part of it, a nice way to think about it is these proxy wars being waged by the tech giants through these AI startups. So you've got Microsoft that's invested $13 billion into OpenAI, a return, by the way, that's 10x'd as of that deal that they renegotiated last week. And then you've got Amazon invested into Anthropic. And both of those companies, notably Microsoft and Amazon, like their AI strategy is really being the cloud backbone to these players. A lot of the compute that they're providing is how they're capitalizing on an AI strategy, but that is different to having an in-house LLM that is competitive like that Anthropic, like that OpenAI. So they're kind of betting on those players to fill in that piece of the strategy for them. But to your larger point here, now we're seeing this cross-pollination where you've got Microsoft, its investment into OpenAI. OpenAI is now using cloud compute from Google, from Microsoft, from Amazon. And that's because there is this voracious appetite for compute. So OpenAI needs to diversify who it's working with. And on the flip side, Amazon, because it isn't trying to get its own chatbot out there, they need to get more AI customers on their cloud.
So it's not who's dating whom, it's everybody's dating everybody. Yes. So that the entire commune, for lack of a better term, can win.
But you know who is exclusive? OpenAI only appears to be working with Nvidia GPUs right now because they signed with Google Cloud in July, and they did not want to use their in-house TPUs, so they're using Nvidia there. This Amazon deal, at least for now, it is not using its in-house Trainium chips. It's using all Nvidia. Now, I have it's my understanding with people who are close to this deal that they are willing to, potentially work in the AMD chips that they signed a deal for. So maybe the new capacity that's being brought online, because AWS, Brian, is building out new data centers specifically for OpenAI, just like they did for Anthropic, doing it for OpenAI. Yeah. And so they might be able to